Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 19th, 2021. Sunday night trade frame review, courtesy of Ken H., doing the due diligence. I'm trying to persuade him to stop posting these charts so that I don't have to do any work. That would make my life a lot simpler. All right, so I'm noticing here on IWM that we've got this really important support level right around 212. It is fractionally higher. The main line of that is around 225-ish. Upper limits, if you just connect all these dots up in here, somewhere around maybe 228, 230. So that's probably the middle region right here. So if this holds, this Kata 2 that you notice, if you use the dragon, it's here and here. If you use the RL10, it's there and there. We had one surge. And if this holds and that breaks out, gets above 219, and this little resistance level, then it gets up here to 223 in a hurry. That's the case for the long side. I think what I would be looking at is a tighter stop. If this thing broke above here, I think I would be having a tighter stop like this, say below the RL. Yeah, I think right in here. I don't think you need that big box. But that would be the box that if it fell out of there, I think I'd be short at 215. I don't think you need that extra piece right there. So that looks like about a $2 risk. And then 217 to 220 is about $3. So I think, yeah, I think I'd have a tighter stop. This is really troublesome right here. If this fails, this is big time collapse, because look at all of this was buying pressure. And this is the last ditch area where all of the technical guys are buying support. If it breaks below 210, look out below. So this one is ready to go large in either direction. That'll be the best trade ever if that breaks below 210. PayPal. Finding support here around the 185 to 190 area. Lots of recovery room. It's had 15 days to fail further, and it didn't. And in fact, you got the turning point right here. You've got the PSAR flip. It's had 1 and 2 efforts out. It can't get any traction though. So I like this as a tactical play up to about 192, but that's the one. Yeah, it's got to get above this price level here to be serious at all to the upside. So this looks like a standard tactical play, aiming to get about $4. And you're risking maybe $1.50. So that's about 3 to 1. Because that's really 4.5. So that's 3 to 1. This is a clear short. So whichever way that goes, it's going to be a good trade. And I would just keep a single position on as a tactical trade. It's really got to get above this price level to be interesting for the long term at all, right? Once that happens, though, it should be able to get above 200 pretty nicely, but it's really got to get through this, that resistance level. So I'm not excited about that one, but I would take that as just a good standard play that might have a second leg in it. U.S. Steel. This is why we like U.S. Steel as a short-term trader, right? Look at the size and regularity of these swings on the weekly basis. Man, this thing just swings. And the magnitude on the daily moves. I mean, here's a move from 21 to 28. That's like plus $7 on 21. That's a 33% move. And then it fails here back to 22. That's let's see, 6. That's about 18, I call it 20% sell off. So this thing, and then it moves a nice, big, bold moves. And so now the most recent one is held at 22.25. It's gotten through the dragon, and it's ready to go. And you would expect it to get to 24.25 in the Bollinger Band mean. So that's $1.20, and he's only risking 30 cents. So that's a 4-to-1 just on a move back to the Bollinger Band mean. And then if this collapses, it's easy to see how that comes down to 22. So that's going to be a great intraday trader. Intraday trading only on this one. I would not be swinging this one until we made some money on the intraday. I just feel like the market's pretty vulnerable right now. Microsoft is really postured well for this exaggerated sell-off and a changing of the guard. So it, from enthusiasm all the way down to panic, enthusiasm all the way down to panic, and it's held here twice. And that's the play to 342. So you're looking at plus $20 and really only about a $3 risk on a plus 20. So that's about 7-to-1 reward to risk ratio. Here's that same trade in the elbow of the dragon to here, elbow of the dragon to there. So you're expecting something like this to break out to the top of the dragon. And then the collapse play is there. I think there's better ones to get short on, to be honest. Like if Microsoft were failing, I would expect to see the S&P and tech and the Russell failing. And I think the Russell would be a preferred way to play the short. Focus on the most liquid, easily shorted symbol that there is, IWM, or the TF futures. Darling Ingredients. This looks like a food service. It's been benefiting from the inflation, but has sold off sharply to a really strong support level on the weekly. It's had 8 days of consolidation in here and actually showed a little bit of juice on Friday. There's a COTA 2. And that breakout should take it to 68 pretty easily. So that's about $3.50 of upside gain. God, I'm drawing like I'm drunk. And this is about a 50-cent risk. So that's about 6-to-1. And then the downside break is available too, where you really want to get the second position is at 62. So that's a good looking chart. VCORE, electronic components. Wow. Just wow, huh? That's a plus 30% gain. And then the big collapse. This is why when the RL270 collapses, we're interested. That's leg one. That was leg two. And now it's held support here at 116 like you would expect. And boy, the turning point of this, you wouldn't expect this to go up in a V bottom like that. But that looks like people buying it on sale. And I think a reasonable target's around 140. So that gives you plus 20. And you're only risking about $3 on this one. So that's 7-1. And then the collapse would be easy to see. That's a good one. Arc Genomics had a good day on Friday. But really this looks just like in the noise. And the last two times it didn't really follow through above 65. So you can play this one, but man, I wouldn't stick around long on this because it's twice it has failed sharply. The only thing going for it is that it's had higher lows. And maybe this is the move that gets it up to these resistance levels. So I would be ready to scratch this one in a hurry. Like if it gets to 66 and rolls over, I would capture that little piece right there and be happy. But if it gets above 66, maybe somewhere in here I put a second position in around 67 and try to get this played to 69. And then the downside, yeah, I'd like that to the downside. If that breaks, here's leg one. That's where I'd put a second position. Leg two, I'd put a third position short. IBM has finally started to play catch up to the rest of the techs. That's the argument for the great turning point in the VWAP or the PSAR flip and the SSC and a COTA 2 and a continuation. This is a Z3 pinch. And that's in play. And really, it has to get above like 134. And then it should close this gap. So I think I'd be adding a second position around 136. And you're only risking a buck. And then the breakdown trade takes it back here, and then here, and then here. So this is a perfectly postured critical state in either direction. It's going to test that Z3. Is this the breakout? We shall see. But that looks like a promising pattern at big sell-off and an orderly reversal. Last but not least, Boeing. Well, that's got to be a value play right there. The last time, if it just does what it did the last time, 212 is in play. So you're risking $4 and you're looking to capture 18. So that's 4.5 to 1. So yeah, that looks good. And then the breakdown is easy to see. It's hard to see that thing failing with the drums of war with Russia being beaten, but the upside looks reasonable. All right. Great set of frames as usual from Ken H. And I will say it again. If you want to improve your trading, start with quality raw materials, which look like the trade frames that he's finding. You know, Maybe the worst frame he found was 2-to-1 with the Russell. And you're willing to take 2-to-1 in the Russell because it is such a reliable mover and has so much volume and is easily traded in the futures. But everything else he's finding is 3, 4, 5, 7-to-1 in both directions. That's how you find critical states and then you improve your performance, because critical state trading allows you to be small when you're wrong, large when you're right. And when I say wrong and right, I mean the market goes in your direction with strength. That's all that means, is that you're aligned quickly with the direction the big move happens. So be small when you're wrong, large when you're right. All right, that's everything we got for today. We shall see you tomorrow.